to state charges.
Mr. Roof, you're pleading guilty to 9 counts of murder and 3 counts of attempted murder. Is that correct?
Yes.
The self-avowed white supremacist was convicted and sentenced to death in federal court last year for killing 9 people at a historic black church. After today's guilty plea, the judge sentenced Roof to a mandatory life sentence for each of the 9 murder counts without the possibility of parole. It is Raise the Banner night at Wrigley Field. It's also the home opener for the Chicago Cubs. The Cubs will raise their World Series champion banner for the first time in 100 years. You're listening to the latest from NBC News Radio.
Disney on Ice presents Dream Big. Join Cinderella, Rapunzel, Ariel, and more Disney princesses as they let courage lead the way. Then discover true love with Anna, Elsa, and Olaf from Disney's Frozen. Adventure is waiting for your family.
Opening night tickets start at $15. Restrictions and additional charges may apply. Playing at Long Beach Arena April 20th through 23rd and at Citizens Business Bank Arena April 27th through 30th. For tickets, visit DisneyOnIce.com today.
What have I learned so far? I've learned that dropping out of high school was my decision, but as a single mom, that decision affected more than just me. To set an example, I had to be the example. I found a free high school diploma program at Learn for Life that fits around my busy life. I have a team of teachers, tutors, and counselors that really care. I learn at my pace in an environment that is safe and comfortable. What have I learned so far? I've learned that I can change my life.
Are you 14 to 19 years old and looking for a free high school diploma program with flexible meeting times? This program allows you to keep your job or important family responsibilities while earning your high school diploma. If you've fallen behind on credits or dropped out of school completely, get back on track with free tutoring, a caring faculty, and one-on-one attention. For more information on how to reach your graduation goal, visit learnforlife.org. That's LEARN, the number 4, LIFE.org. Or enroll today by calling 877-360-LEARN. That's 877-360-LEARN.
This is KCAA.
Good afternoon. Mark Westwood here at KCAA 1050 AM, 102.3 FM, and 106.5 FM, and reporting to you on the latest updates on the North Park shootings here in San Bernardino. By now, most people have heard about it, but for those who haven't, at about 10:27 a.m. this morning, a husband entered North Park Elementary School, registered at the front counter, walked in and shot a teacher, his wife, fatally killed her, then committed suicide himself. That's so reports go. There were 2 children injured. Those children have been taken to separate hospitals and unfortunately are in critical condition. Prayers and good thoughts and good wishes go to them. Monday's dramatic event was centered inside the elementary school classroom where students witnessed the climax to a couple's domestic dispute. When the gun smoke cleared, 2 adults were dead and 2 students critically wounded. Witnesses say a husband checked into the office at North Park Elementary School, went to his wife's classroom, pulled out a gun, shot him, then her, and then himself. The adults died at the scene. The surviving students are at separate hospitals in critical condition. The school was immediately locked down and students were taken to nearby Cajon High School. Well, they were taken to California State University, San Bernardino. Parents checked in at Cajon High School, and they are at the moment in the process of reuniting with their children. If you are one of the parents that hasn't been reunited yet, you are to immediately go to Cajon High School in the gymnasium and get the credentials to go and get your child. Your children are being held in protective shelter by law enforcement and by staff. They're being attended to, given water, food, and they'll remain there until you pick them up. The school will remain closed today and tomorrow and maybe possibly the next day. Counselors are being made available to help students, teachers, and parents get through this trauma. The city's second major tragedy since 2015 when terrorists killed 14 people at the Inland Regional Center and wounded 37. This is not a terrorist attack. This was a domestic dispute involving gun violence. Police are being thanked for their 7-minute response to Monday's school shooting. Very fast response, 7 minutes. Meantime, condolences from this station and around San Bernardino are pouring in from educators from throughout the nation. And this news is being reported from this station and from the local area throughout Canada and foreign countries throughout the world. Once again, San Bernardino, the victim of shootings for the second time in 16 months. We'll get back now to regular programming on KCAA 1050 AM. 102.3 FM and 106.5 FM.
Good afternoon, and welcome to the DRC Wealth Management Hour. My name is Bobby Cherry. I will be your host this afternoon, and I have a special guest in the studio, Mr. Ralph Preston from Heritage West Financial, based out of San Diego. Today's segment will start with what I'm watching this week, which is basically the verbal dialogue of the blog that's on dreadheads.net, what I'm watching this week, which is a restatement of the activity in the market last week and a forecast looking into this week and market activity. Stocks gave back prior week's gains as each of the indexes lost value last week. The small cap Russell 2000, which had gained over 2% the prior week, fell over 1.5% and is once again in danger of falling below its year-end closing value. Energy stocks rallied midweek, riding the increase in oil prices. However, that surge wasn't enough to keep the large cap Dow from falling back a bit. The labor report, while positive, came in well below expectations, which may have dampened investor enthusiasm by the close of markets last Friday. The price of crude oil increased last week, closing at $52.29 per barrel, up from the prior week's closing price of $50.85 per barrel. The price of gold continued to climb, closing at $1,256.10 by late Friday afternoon, up from the prior week's price of $1,250.6. The national retail average gasoline price increased $2.36 per gallon on April the 3rd, 0.045 cents higher than the prior week's price, and 0.277 cents more than a year ago. Corn, soybeans, and wheat all had small moves on Friday, but all three crops closed lower for the week amid a lack of market-moving crop news. The U.S. missile attack on the Syrian airfield supported Wall Street, crude oil, and the dollar, and gold, but had little impact on the crops. Selling of the May crop contracts likely increased as followers of index funds started their 5-day rolling out of those longs. The May contract had been losing open interest prior to the fund action. Weather news is largely good for crops but bearish for prices, with the recent widespread rain to be followed by a few days of warm, dry conditions in both the plains and the Midwest. Rain expected to the Midwest on Saturday, with severe storms expected in parts of Kansas, Missouri, and Iowa. And now, I'd like to introduce my guest, Mr. Ralph Preston. Again, he is from Heritage West Financial, a managed futures and commodities shop down in San Diego. He's a good friend of mine, and I'd like to open the conversation. How are you doing today, Ralph?
I'm doing well. Thank you, Dempster.
Fantastic.
Good to be here with you.
Glad to have you here. This is our inaugural show. We're bringing local and national guests to a local atmosphere via KCAA. Welcome to everyone here. We hope you enjoy the show going forward. We're going to be bringing you, as I mentioned, all kinds of guests revolving around the wealth management, insurance, securities, real estate, and basically any type of investment opportunity that you would find fulfilling for your goals for a better life for yourself and your family. So, Ralph, let's talk about what's going on in the world right now.
And there's so much going on, too.
There's quite a bit. We've got, not only domestically, we've got the actions, as I mentioned, what happened in Syria, and we saw, well, I'm going to guess we're going to see some price activity here this week before that's over. We've got the elections going on in France. We've got the South Seas and the Korean Peninsula action. Looks like they may be stirring the pot over there. So there's all kinds of things that are coming into play here in the next matter of hours to days that are going to be obviously affecting the market conditions.
Indeed, hours to days, we could say maybe even some days and weeks if we're going to see any follow-up action on the part of Trump and Syria take place. Interesting in terms of watching markets out on Thursday, Friday, when we found out about the missile strikes. We did see about a 1% gain in the price of crude oil. It was up about 50 cents on that missile strike. So 1%, it's a movement. As I would agree with you that missile strike put some underlying support on the price of crude oil. But what I'm getting to is we really didn't see a dramatic increase in the price of crude oil. And that may be because the markets, particularly crude oil, are getting a little bit numb to all this unfortunate violence taking place in the Middle East. And I'm beginning to think that if we do see a market reaction, a significant market reaction, whether that be across the equities, safe havens such as gold and bonds, and reaction to crude oil, that we might get that if we see any action take place in the Korean Peninsula.
And I would have to agree. The Korean Peninsula is a bit more ambiguous. There are some reports out this morning that the Chinese may or may not have started to amass some troops on the North Korean border. That may be a protectionary measure if, in fact, that some activities do happen there, probably just there for refugees, if necessary. Or it could be something more forbidding. We don't really know. But I would agree with you that, yeah, price activity I would expect to happen more so if something were to happen in that area of the world as opposed to the Middle East. Because, the markets over there, and plus with the vast amount of resources that are available in the world, there's the glut of oil. So I don't see the scarcity happening if, in fact, something more extensive were to happen.
We haven't seen that fear premium seep back into the price of crude oil. As you mentioned, we're hearing rumors of the Chinese building up troops along the Korean Peninsula. Here in the States, we're hearing, as I was coming into the studio, reports that the Vinson battle group based out of San Diego, the aircraft carrier strike group, is moving closer to the peninsula. These are just actions of that are on the world stage. Our president is letting the world know that we have a new sheriff running this country, and how he's gonna enforce his authority, the United States authority across the globe. And our interest in all this is, will it have a market impact?
Agreed. I think, looking at the clock, the Asian markets are about to open here in about 30 to 45 minutes. And so I think we'll see some activity there. I know as of Friday of last week, most of Asia was fairly sedimentary. They didn't really react too much. Same thing with Europe. But again, as we move further along, and we'll see some reactionary measures from some degree from both theaters of action, we could see some volatility. But again, in my mindset, volatility for an investor is a good thing. You want to have volatility, whether it's good or it's bad. That's the opportunity for you to make money. Depending on your own personal strategy, volatility is always a good thing. Would you not agree?
Yeah, markets don't move in one direction, or else it wouldn't be a market. I think if a market just moved in one direction, or if we always had a one price, that would be indicative of government controls, actually. So this volatility, while sometimes it could be a roller coaster, it is a hallmark of our society in terms of price discovery.
Mm-hmm. What are your feelings on? We got some market numbers on the employment sector. Obviously, the numbers were significantly lower than they were expecting, 89,000, I believe, versus an expectation of 198,000. The press has been blaming that on weather. The weather got too warm, or got warmer faster than anticipated. I'm a bit skeptical on that. I'm seeing overall the market in itself. We're at some categorical highs that we haven't seen in a long time, and plus the valuations of stocks are also at an all-time high. So in my mindset, including the employment sector, perhaps we are that rubber band that's been stretched, and maybe it might be time for it to be released and allowed to move a little more freely, and then probably re-stretched again. What do you think?
Well, I know that there's a lot of surprise over that 4.5% unemployment rate that was released on Friday. All in all, I would focus on that here in the States we're doing much better than they are doing in Europe. Here in the United States, I reckon this is a 4.5%. It's a much healthier labor economy than they have right now in Europe, where they're working just 35. There, you have people protesting in the streets for 35-hour work weeks. While here in the States, we have a 4.5% unemployment rate, which is healthy. So my takeaway from this is right now that the focus is going to be on the United States, and that the United States is doing better than the other side of the pond in Europe, especially given that there's a threat of France now coming up with an election for potentially leaving the European Union on the heels of the Brexit that occurred in June of last year. I think this is also a symptom, this upcoming election, and it's the results of a greater sclerosis that may be beginning to infect the European continent politically, and once again, to our interests, how will that affect the markets?
I think that you raise good points there. Seeing how Marie Le Pen is doing in the French elections, and we saw what happened with Theresa May in Britain during their Brexit. This could be a Frexit that may be another catalyst. What I am kind of sensing is that the global population, you're seeing a lot of the populisms happening. You're seeing a rise of nationalism happening. And you're seeing basically kind of a throwing off or a wanting to throw off of the elite's rule, which may be a good thing for markets. But again, there's a whole lot of ambiguity there because we don't exactly know what a bunch of untrained political minds are going to bring to the table. It could be a good thing, it could be a bad thing. But I know for us, as you mentioned, the United States is kind of the best house on the ugly block. So regardless of what happens in Europe or what happens in Asia, that flight of safety is going to occur. And we've seen small signs of it so far after the elections and with some variances from different incidents. Would you see, well, let me rephrase that. I know when the vote for Britain leaving the EU, the market kind of anticipated a significant drop in the Dow. And you saw that night, the futures dropped to about 800 points. They quickly retracted and we came out positive coming out of it. But would you be comfortable in looking at the activities of the French election? Would you think we would see somewhere of a similar scenario?
I believe so. What I'm looking at with the Brexit and with that jump in stock prices that occurred as a flight to safety. After Trump was elected as well in November, we saw the stock markets rally again, and we were calling that the Trump rally. Mm-hmm. I'm curious and suspecting if this rally that we saw initiated in June with the Brexit, if this is more of a flight to safety rally from the European continent. So we don't exactly know what is driving the stock market higher, but that is something that I'm surmising at this point, that it could be a flight to safety based on concerns of geopolitical breakup of the European Union. So capital has to go somewhere.
It does. And it has to be active and has to be moving at all times, which would, again, if the markets aren't performing, then you do need to transfer your assets and your needs to a different market. And, if the euro were to sustain more activity on the downside, that would only help us in the United States, again, or the yen, because those are pretty much the two only predominantly capital resources that are predominantly traded in the world.
The United States has we've heard dollar bashing for over a decade now. Mm-hmm. And you're not going to hear any of that from my mouth, at least not yet, because I don't see it. And if I saw it, I'd do it. But actually, I'm looking at the potential for a strengthening dollar if this European Union begins to deteriorate. So that's something that's on the radar screen for us.
Well, I think you're correct. Just looking at the numbers specifically for the manufacturing sector, just here in the United States last March, the manufacturing sector actually expanded. It was slower than it was in February, but we're seeing our economy actually getting some traction. It's not the volume nor the pace that we would love to see of activity, but we are consistently seeing consistent growth in the manufacturing sector. We're seeing the job numbers continuing to rise, and obviously we're seeing the unemployment numbers continue to drop. So that does substantiate where we are in the world versus a slowing economy, specifically in Asia and in Europe.
We still have a growing population. A replacement rate here in the United States of, I believe, a 2.1%, while in Europe it's below 1% in the replacement rate. So this is a demographic trend that I believe also speaks to economic viability. Here in the United States, we have a growing, vibrant population. Europe is plagued right now with migrants, refugees, economic problems. So I'm not seeing a lot of growth prospects right now, or a lot of sunshine coming out of Europe, and looking at most of that here on this continent in the States.
Okay. Well, let's shift the conversation a little bit slightly. So, being that you're in the business of the managed futures and commodities, which a lot of our viewers, I'm probably going to just put it out there that they're not that experienced between the differentiation between the equities market, which is the traditional stock market, mutual funds and ETFs, which most of our listeners are invested in, versus the commodity futures market, and how the interplay between those two sectors work, and how our listeners can actually take advantage and utilize that interplay for their own financial and welfare.
Well, it's an alternative investment. It's risk capital is only supposed to be used. And everybody's situation is unique. So we can't give advice to just everybody all at one time because everybody's situation is unique.
Well, more specifically, when we talk about the interplay between, say, oil and the dollar, I know a lot of people will be listening on the news and they won't understand the interplay of that. Could you give our listeners perhaps a little more basic understanding of how exactly the fossil fuel markets do in fact move the dollar?
Here's how I could phrase it. Typically, a currency, a stronger currency that commodities are priced in, as that currency gets stronger, the commodities that are priced in that currency get pushed down in price. So a strengthening currency typically, so a strengthening dollar typically would push down agricultural products, metals products, energy products. So a strengthening currency, commodities that are traded in that currency, as it strengthens, we would look for those commodity prices to head lower on the back of a strengthening currency. And that is, in essence, what I'm looking for based off of all this geopolitical uncertainty coming out of Europe, of the potential for a strengthening U.S. currency over a European currency, given what's taking place right now in Euroland.
Fantastic. Coming back to more focusing on the American markets and positioning as we go through, first quarter, the numbers that we saw in first quarter were pretty outstanding. We haven't seen a productivity and activity out of the stock market like this in a while. Going back to my earlier point, we are seeing what I would call some tops in the marketplace, where I would expect some of the fundamentals and some of the technicals that come into the interplay on the activity of the stock market will really start to have to show some purpose driven as to substantiate where we are activity-wise. If we were to have a catalyst, say, over in Europe and say over in Asia, and with our market sitting as where it is, could you forecast or would you recommend at least the opportunity of looking at the world differently, say if the scenario just completely shifts in a different direction?
If we see a change, so are you saying if we see Le Pen get in,
yes.
What kind of, if we see Le Pen get in, or maybe let's just say if Le Pen does not get voted in, what I would look for. Actually, if Le Pen did not get voted in, this will answer a commodity question too. I still would see on the horizon the potential for a weakening European currency based upon the elites, the bureaucrats in Brussels never want to admit that they've done anything wrong. They don't want to ask the people what we've done wrong. They just want to always say that they're right. And what this could do is if Le Pen loses and the European elites, the technocrats say, hey, we were right. That was just, the Brexit was an anomaly. It's not the trend in this, it's not a global trend in populism. That what could still happen, we still have Greece still has a demographic issue that they're wrestling with. They still have pension crisis. I think all in all, Europe doesn't look well. And then my general perspective is we're looking at a dollar that could potentially strengthen and lower commodity prices in general.
Fantastic, fantastic. Well, with that, we're going to take a quick commercial break for some sponsor news. But please come back and join us on KCAA 1050 AM, 106.5 FM, and 102.3 FM.
KCAA is your CNBC news affiliate. We're the station that gets down to business.
The most valuable car company in America is Tesla. Elon Musk's electric car company based in Fremont, California, overtook General Motors as the week began in total stock market value. Even though Tesla only makes a small fraction of the number of cars of Detroit's Big Three, it's a neck-and-neck battle on Wall Street between GM and Tesla for number one. Both are valued at just over $51 billion. Ford is back at $45 billion. For now, at least, investors view Tesla as the future, and major car makers were hurt by a big slump in sales last month. Getting your car fixed keeps getting more expensive thanks to new technology, so plan ahead if you can.
We suggest a kind of rainy day fund for vehicle repairs, something as little as $50 every month that could certainly help them avoid having to experience any more financial troubles.
John Moreno with AAA says its survey shows 1 in 3 American car owners can't afford unforeseen car repairs, which now average between $500 and $600 and rising. The federal government is working to put more pressure on Google over claims the tech giant pays women employees less than men.
The Labor Department has asked a San Francisco federal judge to order Google to provide detailed information on how much it pays men and women workers. Federal investigators have made a preliminary finding that Google, as a federal contractor, has shown a pattern of paying women less than it pays men. The motion filed late last week asked a judge to order Google to provide employees' names, addresses, phone numbers, and email addresses. Google argues the request violates the Fourth Amendment protection against unreasonable searches. Mark Mayfield, NBC News Radio.
Wells Fargo Bank is forcing its former CEO and former retail banking chief to pay back a total of $75 million of pay, mostly stock grants and options, laying full responsibility for the fake account scandal on John Stumpf and Carrie Tolstead. That brings the total Wells managers have paid back to almost $183 million. The Wells board says it felt misled and didn't know about the extent of the scandal. Consumer and Business News, Joe McConnell, NBC News Radio.
California's #1 volume GM dealer, Mark Christopher Auto Center, says keep your money in your pocket. And so they're offering you $0 down on a purchase or a lease as truck month continues. That means you'll get $0 down APR on up to 60 months plus $55,000 in rebates on selected models. Chevys, Buicks, GMC trucks, even Cadillacs. You'll find Mark Christopher Auto Center right on the 10 freeway in Ontario. Or you can go to markchristopher.com. Mark Christopher is California's #1 volume GM dealer. Family owned and doing things right since 1975. Remember, $0 down delivers at Mark Christopher Auto Center, Vineyard exit of Interstate 10 in Ontario.
If you're looking for a full or part-time sales position and you have radio, TV, or print media experience, KCAA has a great opportunity waiting for you that pays the highest commissions in the market. KCAA is the only station in the IE that broadcasts on 3 frequencies, so advertisers receive 3 ads for 1 low rate. This makes KCAA a must-buy for every local business. If you're interested in a sales position with us, call 909-885-8502 or email ceo@kcaaradio.com. KCAA Loma Linda, your CNBC news station, where your business comes first.
Hi, and welcome back to the DRC Wealth Hour on KCAA, AM 1050, 1065 FM, and 102.3 FM. Today's guest in the studio is Mr. Ralph Preston from Heritage West Financial out of San Diego. And before we went to the commercial break, we were talking about the strength of the dollar and a couple other things involving commodities. Looking forward into what the activity we're expecting this week there, Ralph. This week, we should be probably focusing on inflationary indicators as the latest inflation on consumer prices, producer prices, and retail sales become available for March. Also, investors will be watching first quarter corporate earnings reports, which should begin to coming out this week. Grain futures are mixed this morning as overnight trading winds down, reflecting a nervous tone on outside markets focused on war and peace. Stocks have traded mixed in Asia on increasing tensions with North Korea, then turned lower in Europe as uncertainty rose over the French elections later this month. U.S. stock index futures are trying to firm as investors debate Friday's weaker than expected report on jobs growth in March despite a falling unemployment rate. Markets closing in the United States for Good Friday on Friday. Let me try that again. Markets will be closed in the United States on Good Friday, with some around the world shutting for Easter on Monday as well. So with all this activity going on, Ralph, in a general sense, with the dollar showing continuing activity and continuing strength, what would be your forecast, or if I could say your opinion, on how that's going to affect the gold market and even how it's going to affect the agricultural market?
I like the way you phrase that, because it was given a certain circumstance. Under these conditions, what could happen? Well, under this perspective that I'm sharing with you, that if we see a deteriorating European political situation that causes capital to leave the continent into the States. I would look for the dollar to strengthen, as we were discussing about a strengthening currency and how commodities are priced in that currency. As a currency strengthens, we would look for them to weaken. So what I'm getting to is I actually see a potential for the price of gold to dip below under $1,000. And I know that everybody out there on the road has heard nothing but gold is going to the moon and that it's the next best thing to a pet rock, that there's a potential here on the back of a strengthening dollar that we actually touch that 850 support level, and 850 represents the 1981 high. So after prices in the mid 2000s tore through that 850, we never looked back. We went straight to like 1900, and right now we're sitting right around 1250. So say if we did see a dip down to like 950, that's really only just a 33% move to the downside. I'm not forecasting a dip down to back to 250 where we were 17 years ago. But I could see the price of gold dipping below $1,000 sometime this year on the back of a surging dollar. Based on that, that's strictly based around the circumstances and the market conditions that we outline with on the back of a surging dollar. With some of the agricultural markets, I think that there's a potential as well. If we do see a surging dollar on the back of a European political breakup, that we could see further deflation in, say, ags as well. So, for example, the soybeans and the wheat could continue to dip down a little bit lower. Anyone who just looks at a chart of wheat for the past 5 years, or if you just look at a chart of wheat over the past 20 years, you could see it hit a high about 7 years ago. Been kind of steadily going down from there, and I just don't think that trend, that steady downtrend that we've seen in the wheat market is completely exhausted itself to the downside before we start to see it possibly begin to trend higher over the next couple of years. So it's been trending lower for several years, and I just don't think we've seen the low as of yet in the wheat.
And I wouldn't say that, especially sticking to the agricultural side, the consumption levels have not diminished. But the price activity of these commodities has continued on the downside. Trying to understand what sort of factors are actually driving this, because you would believe with the global population continuing to grow, and agriculture is a world market, you would expect, given some restraints to weather activity, obviously, that the prices would in fact should have already started to move towards the upside more substantially.
You would think also with this anticipation for inflation. But so a combination of demand, inflation, it just hasn't manifested itself yet. And I would think that the reason being is, once again, a strengthening dollar. We've seen the dollar strengthen over the past 12 to 18 months. And that could be potentially a reason why we've seen deflation continuing to stick around in the commodity complex, keeping prices at least subdued rather than taking off in a manner that they did in the 70s, stoking inflation in consumer products.
Good to know. Well, seeing what we're talking about, the inflationary measures, and we're also talking about Janet Yellen and the Fed. So we've seen already this year they've taken this up 25 basis points, and we saw 2 rises last year, with the outlook that there's probably going to be at least 2 more this year, going back to the United States is the prettiest house on an ugly block. How sustainable do you, from your opinion, how sustainable would you feel this is? We are seeing activity in the employment sector, and we're seeing more people becoming employed. We haven't really seen a significant uptick in wages yet. So I'm trying to understand exactly how the Fed is seeing things versus the indicators and the fundamentals that I'm seeing.
Well, I'd also like to say, in terms of what the Fed is saying, we're all attempting some armchair forecasts here, but the Fed in their economic forecast is notorious for not getting their forecast right either. So it is difficult trying to look out any more than 6 months in the future. I believe Alan Greenspan said it is guessing. But in terms of the inflation, and you mentioned wage inflation, that is a key indicator that the Fed is looking for, and that's out of their control. That's going to be in the private sector's control for determining when to raise wages. So that is a key measure for the Fed. In terms of the anticipated rate hikes and what we're looking for, implied rate hikes on the Chicago Mercantile Exchange's futures contracts that imply rate hikes in the future are indicating that the market is expecting at least 2 more this year.
Yes.
At least 2 more. And they are obviously ahead of the curve, ahead of the ECB on the rate hikes, while the majority of the industrialized world is near zero or negative. We're the only central bank beginning to offer a yield. So once again, this plays into the potential for a stronger dollar story moving into the future.
Good. Fantastic. From the proximities, let's kind of look over the horizon here, going into the elections of 2018. We're seeing now, with the Trump administration in place, and we're seeing some employers actively, at least the numbers that we're seeing on the granular level, the employment numbers are starting to increase, and you can kind of make the case that they were just kind of sitting. They were just sitting on the sidelines during the entire Obama presidency. How would you substantiate the growth that we've seen since the election, particularly in the employment sector?
Well, to fair, it was a surprise not only to me but other people as well that we saw the unemployment number get pushed down to 4.5%. All I can say is I would speak to in terms of a demographic issue. The United States is a growing and vibrant population, which is reflected in our economy, as opposed, I'm going to contrast it against an economy in Europe that's stagnant, that is suffering from demographic issues. And once again, I would point out that the demographic issues could be a reflection of economic vibrancy. So here in the States, we have the theme of Trump was bring back manufacturing jobs. Right. Not that it happened that fast, and not that the bump in the unemployment rate had anything to do with the with Trump. But I'd like to share this story, actually, when it comes to the unemployment numbers. I had a friend, Larry Garrity from Chicago. He had worked for the Federal Reserve in the past, about 15 years ago, and I remember him sharing with me that going into that non-farm payroll report that's released every first Friday of the month, which has been important for market guidance going back to the early 80s. That was the economic number during the early 80s with Volcker that everybody started to pay attention to, the non-farm. What's the unemployment rate? That's when it really became a front and center issue for markets and market watchers. Larry would share with me that even amongst the Federal Reserve, that they would get the Labor Department numbers about 24 hours before. And that even amongst a set of government, well, not that the Fed is a government institution, but even that the Federal Reserve body would argue amongst themselves if the government statistics were even accurate. So here you have Fed officials saying, well, is the Labor Department even capable of really telling us what on a precise level? So I just thought that was an honored peek behind the curtain to see that that the Fed can sometimes even question Labor Department statistics.
And that, I think that does kind of substantiate some of the things that were said during the course of the election and before the election, specifically on the employment numbers. Are these numbers really, 4.5%? That's a pretty low number. But when you look around, let's take this area where we're at right now, and currently in San Bernardino. When you look around and you hear a 4.5% national number, when you look around regionally, it's like I don't see that. I don't see the economic viability. There needs to be more done. There needs to be more input, both on the state and the local and the federal level. But that's a conversation for a completely different time.
Always can do more. And on that note, in terms of rationalizing it on that number, I was trying to figure out how did they get this number? Who is that of? Because I know that they'll come up with so many definitions of what a person is and who they're counting.
And the numbers, well, to use President Trump's, we had the fake job numbers before he got his first job numbers as being the president, and then those numbers miraculously became real.
Some gymnastics.
That is, I don't know the gymnast who just won the Olympics of recently, but that was probably a 10.
Verbal gymnastics 10.
It was, but then all politicians.
You only want to believe it when it's good for you.
But
and when it's not, yeah.
Well, and as we say in the stock world, when the market's up, we take credit for it. When the market's down, we're not going to be found. Fantastic. Well, going further, as you look out over, the vast expanse, as we move deeper and deeper into the second quarter, from your sources and looking out as we move closer into the actual spring activities, what are you forecasting? What are you advising your clients to kind of pay more attention to? What's your catalyst? What's your theme for second quarter?
Well, you know what? We could have almost done that question at the beginning of the show, because I really think that a lot of what we've discussed based on these three potential geopolitical flashpoints, we've got Syria, North Korea, the French election, what that has to do with, once again, my dominating worldview as of this point in time is the potential for a strengthening dollar and the ramifications that a strengthening dollar is going to have on stocks, on commodities, international. Well, what is the effect of European disunity in terms of capital flow into the United States? Mm-hmm. So that as of right now is my worldview, looking for any kind of event, anything like, let's just say we have a World War III event, something that scares us all, that go, whoa, I would think that the United States is going to be the beneficiary of any kind of geopolitical instability. And by that I mean international capital flooding into the United States. The United States has the deepest, most liquid capital markets in the globe. We have what is known in just layman terminology, the financial plumbing to be able to handle trillions of dollars to be channeled into the country when it needs some place to park and be safe.
I would agree.
If there was an international event, I don't think that if you're a multinational corporation and you got to figure out where to put your money during a really bad economic period of time, you're not going to want to send your money to China. You're not going to want to send your money to Russia. You're not going to want to send it to Europe. From what I'm understanding, is that the United States will be the destination for international capital flows on any kind of major geopolitical instability in the coming 12 to 18 months. So that is essentially. So what that would mean is that international capital comes into the United States, looking to the United States as a safe haven flows. So potentially that can benefit U.S. paper.
Mm-hmm. That's a hypothetical. Hopefully, I hope we don't see any type of World War III scenario. Me being a former U.S. Army member, I'm not looking forward to that. And I have a nephew who just came out of basic training in AIT, so I'm not exactly that anxious to see some of that sort of activity. But I understand, we do have a place in the world, and the spread of democracy, or at least the liberalism of democracy, is occurring in the world, and there are some hot spots that we have to pay a little more closer attention to, and those will obviously affect us back here in the home, and they're obviously going to affect our markets and our individual plans for how we get to the future. So with looking back towards let's take a look at Asia. We haven't really touched much on Asia at all, and the flight to safety. Say if some events were to happen and say there was a French exit, as you mentioned, you would see the flight of capital coming out of Europe pretty quickly, I would expect. Now let's look at the flip side. Say we do have some activity in the Korean Peninsula. Traditionally, because of its proximity, I would kind of guess, the Japanese would be the more beneficial party from that. How would you weigh the activity, perhaps? How would you weigh the dollar-yen versus some activity on the Korea Peninsula?
As the dollar being the primary beneficiary and the yen weakening.
Okay.
The central idea being capital wants to get away from where the guns are. So that being the general idea, if the money wants to leave where the violence is. So if you have an event near Japan, say the money wants to leave Japan and go to some place that's safe, or if you have Russian tanks roll into Eastern Europe, we would look for money to leave that area and go to safety. And that same principle being applied to the Japan question, I would look for the Japanese yen to weaken.
Okay. What on the outlooks of, say, we do get a weakening Japan, obviously that's going to help their trade deficit more than it's going to help ours. We may see some blowback on the manufacturing side. What would be a response, or what would you consider perhaps a potential hedge for that?
Well, a hedge. Let me just say, in terms of the manufacturing, the strengthening dollar, that would not be good for the so this is a prime example of how politicians cannot control markets. That our Trump ran on this idea that he wanted to stimulate manufacturing and that the Chinese are manipulating the yuan. Well, he's going to find out real soon here that no amount of jaw-jabbing, while it can do a short-term influence on a day, it's not going to establish a trend in terms of currency flow. So to the manufacturing, I think this stronger dollar perspective that I'm holding isn't going to bode well for, but I'm here just to share what I'm seeing in terms of market behavior, not trying to paint a rosy picture or tell anybody what they exactly want to hear.
Right.
I'm seeing a strengthening dollar actually denting Trump's desire to stimulate manufacturing here in the States.
And I would agree. I just, the historical and, again, the fundamentals and the technicals will line up that with a stronger dollar, it makes our goods more expensive.
Flip side of that would be to Japan. That would mean that if the Japanese yen began to weaken, their exports, it took me about 2 minutes to answer the question, but I would say then we could see exports leaving Japan. That would be good for exports. Same thing for Brexit.
Right.
If we see the English, the pound, the British pound, begin to fall further, this could be good for their exports. So anytime, what happened after World War II in Europe was that all these countries thought, well, it was like a soccer game. Well, our currency is getting stronger. It means that we're winning. Well, really, that's not what happens in the economy. Right? Yeah, actually what happens in the real world when it comes to when your currency gets stronger, it's not like you're winning a football game. What's happening is your exports are becoming less competitive on the world stage.
Exactly. And some people have mentioned, and I'll just stick my toe in the water here. Bringing manufacturing back to the States, again with the strengthening dollar. I kind of look at some manufacturing jobs just are not coming back to the States. I use an analogy of most of us have a cell phone. These smartphones with the cameras in them. All these phones have camera. Some of the rationale to try to bring some of these jobs that are basically what I'd call extinct. It's like trying to take the camera out of your cell phone and replace it with a 35 millimeter film. It's just not going to happen. We need to take advantage of some of these alternatives that are out there. Perhaps wind and solar may not be on the top of the list for some political swings, but we've seen the dynamics of what the Germans have been able to do specifically with solar. We see some more dynamics of the growth in the manufacturing and the growth of the services in the solar and wind capacity, the number of jobs that are growing in that sector versus the number of jobs that are growing in the fossil fuel sector. I think that does play into a rationale that we have to really acknowledge.
Well, in terms of manufacturing, the manufacturing jobs here in the States are, as far I was going with that actually. Well, you're gonna have to pick me up on that one.
Well, you see, a couple of years ago, and I don't have the most recent statistics on me, but Germany and their solar arrays, they're producing so much solar that they're actually selling it to their neighboring countries.
Where I was going with that thought, thank you, is that manufacturing is so 19th century, and we're in the 21st century. So we can have not only a diversified portfolio, but we can have a diversified economy that's not so heavily dependent upon manufacturing, but that there's other sectors that are growing, and they're like energy. technology, that this isn't, once again, the 19th century factory worker, but that we have a growing, expanding economy with other skill sets that the population has to learn.
Absolutely, I would agree, and I think that's the situation we have to actually acknowledge. We can't be looking backwards. We do have to look forward. We are in a global economy. We do see what the Asians are doing. I don't say that in a derogatory fashion, but they're utilizing technology rapidly to their advantage. So are the Europeans. And we look at our kids around the nation. My significant others, her children are in the STEM program, and to me that's fantastic. That is absolutely fantastic when I can see the next generation coming up and they're getting themselves trained for an actual 21st century economy, as opposed to having this look back to the glory days. Those days have come and gone.
Well, I remember I graduated high school in 1995, and I remember right around the early 90s, they started really training us for computers. And I was thinking about this the other day. I was going, yeah, I remember that. This is the future, and I couldn't see it quite yet. But now looking back, I go, oh, they were preparing us all to understand computers, gearing. Now look at all the kids. So you see little 5-year-olds; they know how to use a computer better than a lot of us.
And I think our economy really has to start ramping up towards that direction. It's not so much as my grandfather, getting up at the crack of dawn, taking care of the farm, or going to work on the railroad yards. These kids they're basically, if you look at them, they're glued to their apps. They're glued to their laptops, and they are inventing a brand new economy that I think we really have to start really paying closer attention to, because it's completely diverse, it's completely different than what we're used to, and it's going to create a viability, not only here in the United States, but also around the world.
And maybe for another show, we talk about the potential for technology taking us to a cashless society in the next decade or so.
That would be interesting. Well, with that, we're going to take a final studio break. Please come back and join us for KCAA on AM 1050, 106.5 FM, and 102.3 FM.
KCAA Loma Linda, your CNBC news station for the Inland Empire.
Hey, Bonnie, your ride is looking sweet, and that bumping sound.
Yeah, Commish, thanks for your referral to Alan Ed's Auto Sound and their expert installations with custom sound systems.
That's right, Commish. Alan Ed's has a wide variety of mobile electronics and accessories from car stereos to vehicle security, including complete interior and exterior upgrades, as well as a full line of restyling options for your car, truck, boat, or off-road vehicle. Alan Ed serves the Inland Empire and San Diego and Los Angeles counties. You can also catch Alan Ed's Auto Sound at upcoming events: Extreme Auto Fest, Hot Import Nights, OC Block Party, The Dub Show, the Lowrider Super Show, SEMA in Vegas, and also the LA Auto Show. Stop by the Alan Ed's Auto Sound booth and see our friend Alden Allen, the event coordinator and social media specialist.
Check out Alan Ed's Auto Sound website at www.al-eds.com or call 888-900-8800.
Alan Ed's Auto Sound. Big bump.
Dex Media is committed to providing powerful solutions for your business. We help level the playing field and give you the edge to compete in today's digital marketplace. Customers expect to read reviews and see videos showcasing your business. They want to engage via social media and text messaging, and they want to do it from any device and any place. Keeping up with your customers' data, social media, and website is a daunting task. Dex Media has the answer. Dex Hub, a complete solution for managing your business. It's an integrated business management and communication tool that provides all of these features in an easy-to-use, affordable solution. You'll have a dedicated advisor who works with you every step of the way, just like they're an extension of your business. Let us help you stay connected with your customers and build on the reputation and loyalty you've worked so hard to achieve. It's easy and simple, saving you time. To get started, check out Dex Hub at dexmedia.com or call 888-733-9482.
KCAA Loma Linda, your CNBC news station, where your business comes first.
Welcome back to the DRC Wealth Hour on KCAA FM and AM. I want to thank our guest today, Mr. Ralph Preston from Heritage West Financial. You can find him and his colleagues at heritagewestfinancial.com. They are a managed future and commodity shop located down in San Diego. I must say, I've, in all transparency, I've had the pleasure of working with Ralph and his associates down in San Diego on a variety of matters with a variety of different clients, and it's been a very, very worthwhile opportunity to work with them, and I look forward to having you guys back.
Oh, excellent. I'm looking forward to it, Dempster.
Thank you again for your time. Again, my name is Bobby Cherry. This has been the DRC Wealth Management Hour. You can find myself and my firm, DRC Wealth Management, at drcwealthmanagement.com, and we can be reached locally at 909-754-1570. Thank you again, and please enjoy your afternoon. The DRC Wealth Management Hour with host Bobby Cherry. Bobby Cherry is an investment advisor representative of and offers securities and investment advisory services through DRC Wealth Management Incorporated, member of FINRA and registered investment advisor. Insurance offered through Bobby Cherry, a multi-state licensed insurance agent. California insurance number 0H34723. Neither DRC Wealth Management nor its registered representatives or employees provide tax or legal advice. As with all matters of tax and legal nature, you should consult with your tax or legal counsel for advice. This show is for entertainment purposes only. No specific nor individual investment advice will be given. The conversations and opinions of this radio show are those of the guests and have not been reviewed by KCAA, DRC Wealth Management, Bobby Cherry, or any of their affiliates for completeness or accuracy.
Tune in to the Commish and CX2 Hour every Wednesday night from 8 to 9 for your favorite old school jams. And to find out what's happening locally, check us out on the radio at 1050 AM, 106.5 FM, or online at kcaaradio.com. You can also listen in by calling 832-999-1050.
Hi, this is Bobby Cherry, the host of the DRC Wealth Management Hour. Join us every Monday at 3 p.m. where we talk about investments, insurance, commodities, tax, and legal matters. We have a revolving group of guests every week to discuss thoroughly these current issues and how they affect you in your day-to-day life. So please join us on KCAA, broadcasting on 1050 AM, 106.5 FM, and 102.3 FM.
KCAA Loma Linda, 1050 AM, 106.5 FM, and now 102.3 FM.
I'm Stephanie Shelton, CNBC. Stocks ended the day barely above flat. The Dow rose nearly 2 points, NASDAQ up 3, the S&P 500 rose 1. Wells Fargo going after about $75 million from some of its former executives as payback for the fake account scandal which unfolded on their watch. Activist investor Jana Partners has taken a nearly 9% stake in Whole Foods. Jana wants to speed up the upscale grocery chain's turnaround and possibly engineer a sale. Whole Foods shares up 10% today. The White House appears to be backing off a firm August deadline for tax reform. Press Secretary Sean Spicer wouldn't firmly commit to the deadline today. And Toyota committing $1.3 billion in investment in its Kentucky plant. But it's part of a broader investment announced last year, and the money goes to upgrade the plant. There's no jobs component. Stephanie Shelton, CNBC.
Welcome to Staples.
Oh, Staples guy, help. I need a presentation printed fast.
Well, have no fear, Staples is here. We can print same or next day.
Wow. Oh, but my budget has me handcuffed.
Well, right now, get 20% off select print and marketing services orders, $50 or more.
Staples guy, you're my hero.
I prefer Prince Charming. You know Prince, because of our printing.
Yep, I got it.
Now at Staples, get 20% off select print and marketing services orders, $50 or more.
Ends 4/30/17. Exclusions apply. See staples.com/spring for details.
Hiring is the most challenging part of my job.
We started using ZipRecruiter about 3 months ago. One click and my job was posted to 200 plus job boards, all the top sites.
All of the candidates came to my dashboard, and it's easy to compare them.
And I couldn't believe the number of great